Hello, everyone. In this session, we're going to talk about the management accounting, and so we're going to talk today decision making and controls. This is one of the paper from the level 4, EQA 16, and of course, like this paper is quite important because we have two management paper in level 4. One is decision making and control, and another paper we have the budgeting. Now, in the budgeting paper, we learn all about how to prepare the budget and what type of budget we have. But with the decision and making control paper, we're going to look at how the management take a decision based on different situation and what sort of control they have. Now, the main area covered for this paper, it is the variance analysis, then the forecasting, and we have some other technical area. For example, we have to give some decision, we have to explain some variance analysis, and we have to look at what sort of recommendation we can give based on the situation. So let's have a look what we have here, and we're going to practice some question from the practice assessment from the AAT website. This is practice assessment 1, and we're going to start this question. Now we can see here the exam information we have here. The exam is 2 hours and 30 minutes. So we can see exam duration 2 hours and 30 minutes. That's the exam duration. And we have to answer 8 questions. So 8 tasks we have to answer. So 8 questions, and every single question you have to answer. All the questions are mandatory. So there is no optional. We have to answer every single question we have. All right, so let's start. And 2.5 hours, 8 questions. Let's have a look what we have here. The first question we can see we have here, that is from the cost behavior. So let's read this question. It says a manufacturer of a single product has supplied the budgeted information below for the next quarter end. Okay, so you have a material per unit, 2.5 kg. So to make 1 unit, we need 2.5 kilo, and per kilo is 3.2. So £3.20 per kilo. Rent per quarter. So for every quarter, the rent is fixed, 7,450. So normally this is a fixed cost because the rent is fixed for a quarter. The material or the labor, normally it is a variable cost. So it is a variable cost because it's a vary with the activity level. If I make more unit, I need more material, and more material means more cost. If I make less unit, I need less material, that means less cost. The next one we have here, lease machine, 7,522 for every 5,000 unit produce. So this is my step cost. Step cost is the cost that is fixed up to a certain level. And that means up to 5,000. So for every 5,000 unit, the cost is 7,522. So even if I make only 4,000 unit, my cost will be still 7,522. If I make 1,000 unit, my cost will be still 7,522. But if I make 5,001 unit, so for the first 5,000, the cost will be 7,522, and for the 1 unit, the cost will be again 7,522. That means for every 5,000 up to, for every 5,000, my cost will be 7,522. That's my step cost. It is fixed until a certain amount or until a certain period. Then we have a maintenance. The maintenance, we have a 2,150 per quarter plus 2.07 per unit. That means it is a mixed cost. Mixed cost, or sometimes we call it a semi-variable cost. Semi-variable cost. That means here I have a fixed cost plus I have a variable cost. So for 1 quarter, this amount is fixed, 2,150, and plus for making 1 unit, the cost is 2.7. for every unit, it is 2.7 plus the fixed 2150. So it is a mixed cost or semi-variable cost. So this is the story of our cost. So let's have a look. What is the question asking for here? The question we have here, calculate the budgeted quarterly cost of production, 15,900 units. So they're asking, how much will be the cost if I like to make 15,900 units? Okay. To the nearest pound. So you don't have to put the pence. So you need to just make nearest pound. And classify each cost using the drop-down box. So you have to say what type of cost it is. It is a variable cost, it is a fixed cost, step cost, semi-variable cost, what type of cost it is. All right, so the first one, I have a direct material. So they are saying the direct material cost 31,008 for 3,800 unit. How much will be the cost for 15,900 unit? It's quite simple because it's the variable cost. We need to find the material cost per unit. So if I say 31,008 for 3,800 unit, that will give me per unit. And if I multiply by 15,900, that will tell me how much is the cost for 15,900 unit. So if I say it, 31,008 divide 3,800 and times 15,900, and that will give me 129,744. 129,744. So this is my cost for 15,900 unit because it will keep changing every unit. If I make more unit, I'll have more cost. If I don't make any unit, I don't have any cost. So that's the variable cost. So you're going to say 129,744. So this is my variable cost. So let's choose it from here, variable cost. Normally the direct material and the direct labor always is a variable cost. The next one, you have a rent. The question said rent is a fixed for the quarter. So rent is fixed for the whole quarter. So you don't have to worry anything. We just say it's a fixed cost, and fixed costs never change. Fixed cost is always fixed for the whole quarter. Remember one thing, fixed cost is fixed in total, but fixed cost can be reduced per unit. So if I make more unit, it is possible fixed cost per unit can be reduced. So fixed cost per unit can increase or decrease, but in total it remains same. For example, if I make 10,000 unit and if my fixed cost is 10,000, that means per unit the fixed cost is 1. But for example, if I make 20,000 unit and my fixed cost is still 10,000, that means per unit fixed cost will be only 50 pence. So if I make more unit, fixed cost per unit will be reduced. So here total is always same. So fixed cost in total never change. So it is fixed. The next one, we have a lease machine. The lease machine, they said for every 5,000, it is 7,522 for every 5,000. So for 16,000 unit, 15,900 unit. So you can see for the first 5,000, we have 7,522. For the next 5,000, we have again 7,522. For the next 5,000, 7,522. That means we have 15,000 so far. And finally, for the 900 only, is still 7,522. Remember that for every 5,000, it is 7,522. So we said 7,522 times by 4. And that is 30,000. Here, if we added all this thing, 30,088 for 15,900. Even if we have a 16,900 or 17,900, we still have the same result. Because for every 5,000, it is fixed 7,522. All right, so you're going to write here that is 30088, and this is my step cost. Step cost. The next one we have a maintenance. The maintenance says fixed is 2150 and per quarter 2.7 per unit. Okay, so let's have a look how many unit you are making. You are making 15,900 unit times the variable is £2.0, £2.0. So my total variable here is 15,900 times 2.07. That gives me 32,913. Plus the fixed we have 2150, 2150, 2150. We have 35,060. 35,060. So this is my semi-variable cost. Sometimes we call it mixed cost as well, the same thing. All right, it's not very difficult one. Let's move to the next one. The next question we have here, that for the high-low method question, it will be very easy as well. So let's try to understand this question. You have supplied with the following information about the factory overhead. So you have a higher unit cost, lower unit cost. The fixed portion of the overhead increase by 12,000 when more than 30,000 units are produced. If I make more than 30,000 units, the fixed cost will be increased by 12. Variable cost will be decreased by 1 per unit for unit produce excess of 25,000. So if I make more than 25,000 units, the variable cost will be decreased by 1 per unit. Okay. So let's have a look. What is the question? The question is asking, calculate the total fixed and the variable overhead for the following production level. So we have a 21,000 unit and 36,000 unit. Okay. So only we can see the impact will be for the 36,000 because it says if I make more than 30,000, then variable cost will be increased by 12. If I make more than 25,000, then the variable cost will be decreased by 1. So it's both are basically the second one. 21,000 unit have no impact, a normal calculation. So let's try to find it out. How much is the variable cost per unit and how much is the fixed cost unit by using this information and use the technique called high-low method. So we take the higher one, 23,900, and the cost is 324,400. And the lower unit is 19,000, and the cost is 295,000. You have to find the difference between these two. So it's a 324,400 minus 295,000. That gives me 29,400. And here we have 23,900 minus 19,000, and that gives me 4,900. All right, this 4,900 will come under the difference of the cost, so 4,900. And if we divide with that, 29,400 divided by 4,900, and this is called variable cost per unit. So £6 is the variable cost per unit. Variable cost per unit. Now we need to find it out the fixed cost. We can take any of these, either 23 or 19. Let's take 23,000. So 23,900. The cost was 324,400 is a total cost. Now from here, I'm going to take it out or take away all the variable cost. So 23,900 unit times by 6 per unit is the variable cost. So it's a 23,900. So my total variable cost will be 143,400. And if I find the difference, so 324,400, and that gives me my fixed cost 181,000. Very simple. So this technique is a very common, and we call it Taylor method. So now we know how to do it. First, I need to find the difference, the higher unit and the lower unit. So the difference, the unit, and the difference between the cost, divide with that, give us the variable cost per unit. Then I can pick any of the unit with the cost and take out all the variable cost. The difference will be my fixed cost. Now I can go back to my question. So for 21,000 unit, how much will be the fixed? How much is the variable? Fixed is fixed anyway, 181. So for both unit, fixed will be 181,000. Fixed will be fixed anyway. For the variable cost, if you remember, we have a variable cost per unit 6. So for 21,000 unit, 21,000 times by 6. So 21,000 times by 6, that gives me 126,000. 126,000, this is my variable cost. All right, for the 36,000 unit, fixed cost will be decreased by 12. So 180 increased by 12, 181 plus 12. So 181 plus 12, it will give us 193,000. And the variable will be decreased by 1 per unit. So normally I have 6, now it will be 5. So 36,000 unit times by 5. Because the question said if it is more than 30,000 unit, the variable cost will be decreased by 1. So we said 36,000 times by 1. Sorry, 36,000 divided times by 5. And that gives me 180. But we need to be careful one thing. The question said, let's check the other one. So we have fixed and variable, and we have this one. It says increase by 12. So 181,000 times by at 12,000, that gives me 193. This is okay. And this one, the variable cost is decreased by 1 per unit for the unit produce excess of 25,000. So you need to be careful with the question. It's not all 36,000 units. So anything excess of means more than. Excess of means more than. So if I make 36,000 unit, so you need to minus the 25,000 unit. So 36,000 minus 25, that gives me 11,000. For the 11,000, I will get 5 variable cost. So that means in this 36,000, we have to separate with the 25,000 and 11,000. So for the 25,000, the variable cost will be 6 as usual, normal. But for the rest of the 25,000, excess of 25,000, it will be 5. So we say 25,000 times by 6, that gives me 150,000. And 11,000 times by 5, that will give me 55,000. So 55,000 times 150 plus 150 will give me 205. 205. Very careful with this question. So the word it says excess of. That means if I make more than 30,000 units, so excess of 25,000 unit, it will be reduced. The variable cost will be reduced by 1. So if I make more than 30,000 unit, fixed cost will be increased by 12. And if I make more than 25, so excess of 25, the variable cost will be reduced by 1. But up to 25,000 pound, the variable cost remains same, so it will be 6. But anything more than 25, we need to find the difference. If I make 30,000, it will be 30 minus 25. Here I'm making 36, so 36 minus 25. Only the excess 11,000 will be 5 per unit, and other than up to 25,000, it will be 6 per unit, the variable cost. So when you read the question, you have to be very much careful. All right, so we'll move to the next question. Question number 2. And this question we have here from the variance analysis. So let's have a look at this question. Let's read this question. It says the production information below relates to Apricot Limited, a business that package apricot. So you have a budgeted information and we have actual. So production carton, so that's my unit. 5,000 unit was budgeted, but the actual production is 6,000 unit. Apricot kilogram, that's my material. So kg, 50,000 kg I use for 5,000. That was my plan. Like for 5,000 unit, I'm going to use 50,000 kilo of apricot. But actually I use 70,000 for 6,000 unit. Then it cost me 25,000 pound. And it cost me 36,000 pound for 70,000 kilo. Direct labor, my plan was 1,000 hour for 5,000 unit, but actually I have used 800 hour for 6,000 unit. That's really good. And direct labor, we can see we have 10,000 is the cost, and the actual cost is 8,000. So 10,000 was planned for 5,000 unit and 1,000 hour. And actually for the 800 hour, we spend only 8,000. Okay, so I need to find out the variance analysis. Let's look at the first one, the price variance, apricot price variance. The price variance, we always look at the price, but not the quantity. Remember that. When you have uses variance, we look at the quantity, but when you have a price variance, we only look at the price. So here we're looking at the price for apricot. That means we're looking at the material. So we can see here, the price is 25,000. So 25,000 pound for how many kilo? For 50,000 kilo. So 50,000 kilo. That means you understand per kilo is 0.5. So 0.5, 50 pence per kilo. Now for 70,000 kilo, the cost supposed to be 70,000 kilo because we have used actually 70,000 kilo. So based on my plan, 70,000 kilo should be 50 pence times 70,000 should be 35,000. But actual we can see is 36. So it is more than my plan. So actual is 36. So 1,000 is more than I budgeted. So that means 1,000 is adverse variance. So it's 1,000 is adverse because my actual is more than the budgeted. The next one we have here, apricot uses variance. Now the uses variance is all about the quantity. Remember that uses variance is not about the price, it's all about the quantity. So if you look at the quantity, so 50,000 kilogram we used for 5,000 unit. So we said for 5,000 unit, we have used 50,000. So 50,000 kg we have used for 5,000. So 50,000 divide 5,000. And that gives me 10 kilo per unit. 10 kilo per unit. So for 6,000 unit times by 6,000, it should tell me how many kilo I should use. So I should use 60,000 kilo for 6,000 unit. Because 10 times 6,000, it should be 60,000. But actually we have used 70,000 kilo. So the actual is 70,000. So I have used 10,000 kilo more. 10,000 kilo I have used more than my budget. So 10,000 kilo times per kilo, if you remember, we have calculated before, per kilo is 50 pence. So times 50 pence. And that will give me 5,000 adverse. 5,000 helpers. Next one, we have a direct labor rate variance. So let's have a look at direct labor. So you can see we have a 1,000 hour and 10,000 is the payment. So 10,000 for 1,000 hour. So it's a 10,000 is the labor payment for 1,000 hour. That means per hour is 10 per hour. So we look at the rate variance. So if it is 10 pound per hour, so we need to look at for 800 hour, how much it should be. So times by 800 hours should be 8,000. And actually, you can see it is 8,000. So according to the plan, it's supposed to be 8,000, and it is 8,000. That means there is no variance. So this one we can say is a 0. So no variance. We can select from here. There is no variance for that. My budget and my actual is equal. The next one, we have direct labor efficiency variance. So how efficient we have used the labor hour. Let's have a look. So 10,000 labor hour, the plan was for 5,000 unit. So 10,000 labor hour was for 5,000 unit. So we said 10,000 divided 5,000. So per hour, per unit, it was 2 hours. So for 6,000 unit, it's supposed to be 12,000 hour. But actually we use 800 hours. So it should be 1,200, not 12,000. Because we have 10,000 is the amount, not the hour. So it is 1,000 here. So we need to be careful a little bit. 10 less here. Let's do it again. So it's not 10,000 hour, it is 1,000 hour. 1,000 hours. So 1,000 hour for 5,000 unit. So 1,000 divided 5,000. And this is 0.2 hours per unit. So for 6,000 unit, it will be how many hours? So times 6,000 should be 1,200 hours. But actually we have used 800 hours. So we have saved 400 hours. This 400 hours is my favorable. So we need to multiply with per hour. It was 10. If you remember, 10,000 divided by 1,000, that's 10 per hour. If you multiply by 10, that gives me 4,000 favorable. 4,000 favorable. Remember, on the variance, you always have to show the pound, not the hour or not the kilo. We don't show the efficiency or the labor or material with the hour or the kilogram. We show with the value. The value is always multiply with the standard rate. Remember that. Never ever multiply with the actual rate. Always multiply with the standard rate. All right, so let's move to the next one. The next one we have here. This sort of question is very common in the exam, so I need to make sure you revise very well this question. It's a company manufacture product DD. Each unit of product DD is budgeted to require 2 hours of labor hour at cost 18 per hour. So 1 hour labor costs 18, and we need 2 hours to make 1 unit. Very careful. To make 1 unit, we need 2 hours, but per hour, the labor cost is 18. The company manufactured 950 unit, and the labor efficiency variance was 180 adverse. Remember that if it is adverse, that means I have used more. So I'm not efficient. I have used more hour than my budgeted. Calculate the actual number of hours used to produce 950 units to the nearest whole number. So you don't have to put the pence. So Let's try to find it out how many hours I need. For the first, we can see for the first 950 unit, so 950 unit per unit, we need 2 hours. So multiply by 2. So that gives me 950 times 2. So 1900 hours we have on the first calculation. And we have some adverse. So 180 is the adverse. So 180 divided by 18 per hour. So 18. Remember, both are pound. We want the hours. We need the hours, not the value. That's why we're converting the value into hours. So 180 divide 18, that gives me 10 hours. So the value of the 10 hours is basically 180. And the 10 hours we have used excess, extra, than budgeted. How do I understand that? How do I know that? Because it is adverse. So you understand we have used more than the budgeted. So 10 hours I need to add it here because it's supposed to use only 1900, but I can see I have adverse variance. That means I have used more than the budgeted. How many hours? 10 hours. So 1910, that will be my actual hour I have used. All right, the next one we have here, the product is budgeted to use 1.25 kilo of material per unit, and the cost per kilo is 7.80. During last month, the company used 1140 kilo to manufacture 950 unit. The material price variance was 912 adverse. Remember, every time if you look at the adverse, you need to add. If it is favorable, you take away, you minus. So 912 is the adverse. So we need to find it out how many kilo is here. So 912 is the amount, and per kilo is 780. So 7.80 per kilo. So 912 divide 7.80. And that will tell us how many kilo we have. So you can see here we have 116.9. All right, this is the one we need to show according to 2 decimal. Okay, let's have a look. So the question is asking the actual price per kilo of the material. Okay, this time is not total. The actual price per kilo. Okay, so first I need to identify how many kilo. So let's find it out. So we have here 1140. So if we say last 1140 we have already used, and we have some adverse 912. So we say if we added this to how many kilo is here. So we have 1140 plus 116.9. That gives me 1256.92. So 1256.92. And now if we divide 1140, and that will give me the total value. All right, let's try another way because this one could be a little bit tricky for us. Let's try to do it a little bit simple way. So if we try to find it out, how much is the value of that verse, then it will be more easier for us to do it. So if we find it out, how much is the value of the 1140 kilo? So let's say 1140, the material we have actually used, times the per kilo is 7.80. So 1140 times 7.80, and that gives me 8892. So this is the actually used, and also we have some adverse we need to add. So this is the value plus 912. So if we add that plus 912, so the total actual price of the material used is 9804. The question is asking the actual price per kilo. So we need to find it out. How much is the per kilo? Now, if we divide by the actual number of kilo, that is 1140, and we'll come back to the hours. So 1140, that means 8.60 per kilo. So it's a little bit tricky. Remember that the question is asking not total, but per kilo. Actual price per kilo of the material was how much it was, actual price. To find it out, the actual price, we need to find how many kilo we have used, that is 1140. We need to multiply how much is the per kilo, that is 7.8. That gives us 8892. And we have some adverse variance, we need to add that. So if we added that, that gives me total 9840 is the total value of the actual used. And now we need to look at how many kilo we have actually buy or use, that is 1140. If we divide with that, we'll come back the per kilo. This is the total kilo. So if we divide, that will give me per kilo. All right. You have to make sure you practice enough. If you do really rush in the exam, you could make a mistake. So you need to make sure you revise well. So in the exam day, you don't get stuck any question. All right, let's have a look at the next question. This question from the absorption and the marginal costing. Quite interesting question. Let's have a look. Let's read the question first. The following budgeted figure refer to a factory producing a single product. Overhead are absorbed on a budgeted production basis. Inventory is a value on a FIFO basis. Okay. We have 3 months here, month 1, month 2, and month 3. Opening inventory, we don't have an opening inventory. Remember, that is a tricky question. So they give you intentionally 3 months. And you can see the opening inventory is empty. And this too, they didn't tell anything. The reason they didn't tell anything, because you have to find it out, is there any opening inventory or not? Now, obviously, from our previous studies, we know if something is closing for the month 1, that means it is the opening for month 2. And something is opening for closing for month 2 is the opening for month 3. So anything is a closing inventory for month 1 is the opening for month 2. So you can see here how to identify how many closing inventory you have. So we look at how many units you have produced. For example, if we make 10,000 and if we sell only 8,000, so 2,000 is the closing. So any unit I couldn't sell and is still on the warehouse, we called it closing inventory. So you can see here we have a production 10,000 unit and we sold 8,000. So easily I can see here I have a 2,000 here closing inventory. So this closing inventory for the month 1 will be opening for the next month. So this is the first working so we need to do. So we write month 1, month 2, and month 3 before we forget. So we said for the month 1 we have a closing inventory. So we said opening, then production, and the closing. Month 1, we don't have any opening, but production is 10,000 and sold is 8,000. So the difference, 2,000 is the closing. And this 2,000 will be opening for the month 2. Whatever is the closing for month 1 is opening for month 2. On month 2, we make 10,000, production 10,000, so 12. Sold 9,000. So 10 plus 2, 12. From 12, if I take away 9, I have 3,000. This 3,000 will be opening for the month number 3. And month 3, we have produced 10 again. So 13,000. And we sold 11. That means we have only 2,000 closing at the month number 3. That's my first working. So I need to make this working on the paper so that I don't forget it. Very important. All right, then we have a selling price, selling unit, direct material 15, 15, 15, direct labor 10, 10, 10. So it's a variable cost. Other variable cost, you have a 230, 230, and 250. That means the last year the variable cost is increased. So it's 250. The way we find it out, how much is the variable cost per unit? So 230,000 is the total, and divide by 10, it will tell me how much is the per unit. Fixed production cost, again, the per unit you have to find it out. 450,000 divided by 10, that will tell me how much is the fixed cost per unit. Now, before we go to the absorption and the marginal costing, we have to know one thing. Absorption costing, or sometimes we call it full costing method. In absorption costing, we take the fixed cost as a part of the product cost. So we take a little bit portion of the fixed cost and we put inside of the product. For example, direct material, direct labor, overhead, variable overhead, and fixed overhead. That gives me the full cost under the absorption costing. But when you do marginal costing, we do not consider the fixed cost as a product cost. Rather, we take out the whole fixed cost from the total marginal profit. So this is the difference. We need to remember that. All right, so let's try to understand first how much is the unit cost under the absorption and the marginal. So you have absorption and the MC marginal. So the direct material and the direct labor is same. 15, 15, 10, 10, both methods are same. Variable overhead. So if we look at that variable overhead, so we have 230 times divide 10. So 230 divide by 10,000 for the month 1. But actually we need to prepare this statement for month number 3. So look at month 3. So 250 divided by 10,000. 250 divided by 10,000. That gives me 25. So variable overhead is 25. 25. So variable cost is same for both absorption and for marginal. Only the fixed cost, we have 450 and divided by 10. So we do 450 divided by 10,000 is 45. So fixed cost will come just on the absorption costing. So fixed cost per unit 45 only will be considered on the absorption. On the marginal, it will be 0. We're not going to consider that. Remember that. So when you value our closing inventory, we use the full cost for the absorption, including the fixed, but for the marginal, only the variable. So if we add it here, so we have 15 plus 10, 25 plus 25 plus 45. So under the absorption costing, we have 95 per unit. And under the marginal costing, we have 50. All right, let's have a look at the question now. Once you make the workings, the life will be easy to complete the question. So let's do that now. So, okay, start with the cells. So they said, prepare the profit statement for month 3. So that's my month 3, the last month. So I have sold 11,000 units. And the per unit selling price is 90. So 11,000 unit is sold and the per unit is 90. So let's do that. 11,000 times 90, and that will give us 990,000. 11,000 times by 90. So 990,000. 990,000. All right, that's my first thing, absorption costing, and the marginal costing sales will remain same. Remember that. The next one, we have opening inventory for the month 3. Now for the month 3, if you remember the opening inventory, we have calculated 3,000. So under the absorption costing, we need to calculate. So 3,000 we have, and the times by, we have to see what is the question said, anything about the inventories. Very careful with the question. When we read the question, we need to be very careful with that. So we have more information. So let's have a look. Okay, the question said inventories will be using under the FIFO method. Okay, so that's the only information we have for the FIFO method. That's all right. So let's try to understand how much is the value of the inventory we have. One thing we have to be very much careful here, that is, if you see here, the calculation we done here for the closing inventory value, that's for the month number 3. This is the value for the closing inventory. Closing inventory. Now, if you remember, this 3,000, the opening inventory for month 3, is actually came from month number 2. So it is not the month number 3 opening. So it was the closing for month number 2. And because of the closing for month number 2, it's become the opening for month number 3. For that reason, you have to see how much was the value on month number 2, that closing inventory, because the same inventory become opening this year. Now, one trick we can see here, only this figure for the month number 2 is change 230. In month number 3, we have 250, but in month number 2, it was 230. So if 230 for 10,000, so that means it is 23. So you're going to say 23 means for the month number 2, the direct material, direct labor, and fixed overhead is same. So 10, 15, and 45 is same. Only this one, 25. On month number 2, it was 23, isn't it? So 230,000 divided by 10,000. It was 23. In month number 3, it is 25 because month number 3, we have this. The reason I'm following month number 2, because whatever was the month number 2 closing is the opening for month number 3. So opening inventory, the valuation will be different. So this 3,000, I'm going to multiply for the absorption costing. I'm going to multiply with 10. So we have a 15 plus 10 plus 23 plus 45. So 15 plus 10 plus 23 plus 45. And that gives me 93. Very careful with that. And if it is a marginal costing, this is only 3. So 25 plus 15 plus 10 is 25. And plus 23, that is 48. 48 for marginal costing and 93 for absorption costing, because in the absorption costing, we need to add the fixed cost as well. So let's try to find it out. How much is the value for that? So opening inventory was 3,000. So 3,000 unit times by, for the absorption, we have to multiply by 93. Not 95. Don't use this one. Remember that, because it's for month 3. And the opening inventory for month 3 came from month number 2. 3,000 times 93, and that gives me 279. So opening inventory 279,000. And for the marginal, need to multiply by 48. So 3,000 times 48 without the fixed cost, so 144. This is my opening inventory. Then we'll go for the production cost. In month number 3, we have produced 10,000 unit. So how much is the cost for 10,000 unit? So you're going to say 10,000 unit I produce. And obviously, like every single unit cost me 95 under the absorption. So 10,000 times 95. So it should be 950,000. 950,000. And for the marginal, it is 50. So 10,000 times 50, it is 500,000. Closing inventory. Now we have 2,000. If you remember, at the end of the month number 3, we have a 2,000, the closing inventory. So 2,000 times 95. So 2,000 times 95, that gives me 190,000. 190,000. Remember, the closing inventory take away from the cost of sales, but the question said, do not use minus sign or bracket. If the question clearly mentioned, do not use the minus sign or the bracket, don't do that. So just do the positive figure. For the marginal, 2000 times 50. So 2000 times 50 is 100,000. That's it. So find our cost of sales. So opening inventory, last purchase, less closing inventory. That means is our cost of sales. So 279 plus 950 minus 190. That gives me 1039. 1039,000. And this one gave me 544,544,000. Now for the absorption, I'm not going to use the fixed cost because I already put the fixed cost. If you remember, 45 already included on the fixed cost. But on the marginal, I never use the fixed cost. The whole fixed cost, 450,000, I'm going to take away. 450,000. So the profit will be here for me. So cost of sales minus from the sales. So for me, under the absorption costing, the profit will be 49,000. And under, it's not actually profit, it's a loss, it's a minus. You need to show the loss. If there's loss, you have to show the minus. All right. So the next one we have here, the loss is 4,000. That is cost of sales. We have 990 minus cost of sale 544,000 minus 4,500,000, and 4,000 is the loss. So even though you are not using the bracket here, but to show is it profit or loss, remember we have to show the minus sign. Apply the appropriate standard cost for the valuation of the product and inventory. Use positive number only for the sales to fixed overhead. Sales to fixed overhead row. Sales to fixed overhead. So for the profit and loss, we have to show either it is a bracket or it is a minus sign if there's a loss. Very careful with that. Very technical question. All right, let's move to the next one. The next one we have here, this is from the forecasting technique. So let's do that. See the question quickly. It's a retail shop analyze its sales volume using the time series analysis. Enter the appropriate 3-month moving average. So 3-month moving average for the sales unit into the table below. Okay, 3-month. That means we need to add the 3-month, divide by 3, then add the 3-month, divide by 3, and then add the 3-month, divide by 3, add the 3-month, divide by 3. That way. So let's do that. So 5760 plus 5820 plus 5760. That gives me 17,340 divided by 3. And that gives me 5780. 5780. So we need to add these 3 and divide by 3. Then again, I need to add now this 3 to find this 3 divided by 3. So 5760 plus 6600 plus 6120 divided by 3. That is 6160. And then again, you need to make 3 of this. So 6120 plus 6150 plus 6330 divided by 3. That gives me 6200. That's it. It's not a very difficult thing anyway. All right, let's move to the next one. The next one says complete the following sentence using the drop down boxes to indicate your answer. Seasonal variation equal actual sales for a month less the trend. Trend means like it's a long-time data analysis. So for the past few years, when you have a data, based on that data, we can assume like it will happen this year as well, and this is the trend. So for example, if every year, like for example, last 20 years in summertime, the sales is more. So you understand this year, summertime sales will be more as well. So it is happening last few years. This is a trend. The observation that retail sales are higher during the November, December is an example of seasonal variation. Normally, like in the November, December, before the Christmas, the retail shops got busier because of the occasion or celebration. And this is a seasonal variation. So because of the season, for example, during the winter time, the selling of heater will be more, and during the summertime, the selling of ice cream will be more. So it's like a seasonal variation. All right, let's do the next one. The next part we have here to calculate the price index, RPI, and they said cost at January price. Now, this can become both. They can ask you to calculate the present value. This one, they're asking to calculate the present value based on the future price. So for example, the money we're going to receive on March, 123,32,000, how much will be the value if I compare in January price? And the money we're going to receive on June, how much will be the value if I compare in January price? So I'm bringing the future value into today's value. So present value, it is also possible they can ask you to make the present value to the future value. So for example, the price of January, how much would be in June? So it's a very simple calculation. If you practice few, you'll be absolutely fine. So when you need to bring the value, that is today's value or the present value, you always use the base, and the base will be the question said January. That means January RPI would be my base. So that means, for example, 170 for the January, then it will be 170. So 170 will be always top. That's my base, and multiply by 129,000. For the month of January, it will be same. So the value of the cost of January, anything, it will be same. For example, if I say like how much will be the value of £100 today? So the value of the £100 today is £100. But if I ask you how much will be the value of this £100 after 1 year, then it will be less than £100. But like with the same month, with the same period, it is same. So this is 129,000. There is no changes for that. But the next one we have here, 132. So we put the 170 because we want to bring everything to January price. 170 divide 172 times by 132,000. So the 170 divide 172 times by 132,000. And that gives me 130,465. 130,465. The next one we have 174, same thing. January base is 170 and divide 174 times the cost is 135. And that will give me 131,897. So you can see even though I'm receiving 135, but if I want to see the today's value, the reason I want to see the today's value, because my investment is today, my cost is today, but the return will be after 6 months. So if I want to convert the return that I'm going to receive after 6 months into today's value, how much it will be. So this is the reason we want to look at the present value of the cost. So if I want to see the future value, I do opposite. So that time, this 170 will be under, and this 170 with the month will be on the top. For example, for the month of March, 170 will be under and 172 will be in the top. So this value will go up that time. So it will give you the future value. All right, so let's move to the next one. The next one is asking the linear regression. And the regression analysis, y equal a plus bx. So a basically the fixed cost, and b basically the variable cost per unit, and x is basically the number of unit. So number of unit. Need to remember this formula. Make sure you revise this question. It's very common. The regression analysis always come in the exam. Calculate the value of A and B. So they're asking to find it out how much is the value of fixed cost and how much is the value of variable cost per unit. So they give us some information, 200 unit, 2000 unit, 5000, 14,000. So we can see we have to use the high-low method to find it out. So let's try to find it out. 2000 unit, the cost is 14,000. 200 unit, the cost is 5,000. So I need to find the difference. 1800 and 14,000 minus 5,000, 9,000. So 1800 will go under 1800. 9,000 divide 1800. That will give me 5. So 5 is the variable cost per unit. So this is the value of B. B means variable cost per unit. That's 5. We have to find the fixed cost. That is A. How we find it out? You can pick any one. So let's take 2000. So 2000, the cost is 14,000. That's the total cost. Total cost means variable plus the fixed. Now I'm going to take out all the variable cost, 2000 times 5. And the remaining we'll have, that will be my fixed cost. So we have 2000 times 5, that's 10,000. 10,000 is my total variable cost. If I minus the variable cost from the total costs, the remaining will be my fixed cost, 4,000. That's it. I think it's not that difficult anyway. So if you practice a little bit, it will be absolutely fine for this question. All right, so this is the 4th question you have practiced, and maybe on the next session, I'm going to show you some more question. So from 5 to 8. So hopefully, like if you practice, it will be very helpful for your exam. And also some student always email me how to learn some practical work, how to basically work on the software and to get some experience before they can apply for the job, for the bookkeeping, for the payroll, and for the accounts preparation. So I'm going to show you a site. That site I have prepared, and it could be very much helpful if you want to learn some practical work. And I'll put the link on the description. If you click here, you can see there are some courses we have here. For example, build your own accountancy practice, or final account training, or management account training, or assistant accounting, bookkeeping and payroll, or bookkeeping and VAT return. So any of the area, if you have an interest to learn, you can have a look at this. If you think it could be helpful for you, you can learn from here. So that will give you the basic idea how to work in the software and how to work in the company on the real file. All right, so thank you very much everyone for watching. Hopefully this video will be helpful for make you ready for your decision and control exam. Thank you very much.